Hello, good morning and welcome to another exciting morning to talk business. My name is Vlad Nukem on Spectrum TV as well as Business 360. In today's edition of Business 360, we'll look at the key features in the world of business, beginning with the stock market outlook and the forex outlook, as well as the necessity around the scarcity of Naira. Well, Sterling Bank says it has waived all personal account transaction fees as part of its solidarity gesture for its customers over the new Naira scarcity challenge. We begin with Zoom's job cuts. Zoom, the video conferencing company that became a household name when remote work spiked during the COVID pandemic, is laying off 1,300 staff. The move affects about 15% of its workforce, which has seen user growth slow and profits fall recently. Boss Eric Yuan said he and other leaders would also take big pay cuts as the company focuses on making sure it can weather the slowdown. It is joining a large number of other tech firms making similar adjustments. We'll look at the story in India. India will secure oil from anywhere as long as the terms are beneficial, according to India's energy minister. India is the third largest oil consumer in the world, and according to Hardip Singh Puri, India accounts for 30% of global consumption. He said, "Today we feel confident that we'll be able to use our market to source from wherever we get beneficial terms." By beneficial terms in this situation is, you have to be sure of your supplies, he explained. India has been buying Russian oil amid the sanctions. Let's hear from India's energy minister.
No, it will grow because our growth is 3 times the global average. So, I mean, it's rising to 5 million barrels. But since our... No, it will grow because our growth is 3 times the global average. So, I mean, it's only a matter of time before, if the economy grows at 6.5%, 7% and our consumption grows at 3 times the global average, that you'll be looking at not 5 million barrels, but 6.5 million barrels. When it will happen, how will the demand be met? Certainly...
Isn't it time for OPEC to at least consider an output?
Yeah, I have a very simple line on OPEC. It's their sovereign asset, the oil under the surface or wherever it is.
But you're paying for it.
No, hold on. No, wait a minute. It's a little more complicated than that. It's their sovereign right. I have never asked them to sell at a particular price, but I have told them, and I've gone public on that whatever we do in terms of policy responses always has consequences. Some of them are intended, some of them are unintended. I remember with a very responsible member of OPEC, one of the leading member states, one of their entities, I said, look, if you think you are going to reduce the
energy
oil
minister
supply...
says India is ready to buy from anybody, irrespective of the sanctions on Russia. The Federal Reserve Chairman Jerome Powell speaks at the Economic Club of Washington, D.C. on the U.S. economic outlook and monetary policy in a conversation moderated by billionaire investor and philanthropist David Rubenstein. Let's hear from the conversation regarding the U.S. economy.
Thank you for inviting me here today. It's great to be here. So we don't get to play it that way, unfortunately. We have to, but I'll take it this way. So the message we were sending at the FOMC meeting last Wednesday was really that the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of our economy. But it has a long way to go. These are the very early stages of disinflation. So the services sector, really, except for housing services, pardon me, is not really showing any disinflation yet. So our message really was this process is likely to take quite a bit of time. It's not going to be, we don't think, smooth. It's probably going to be bumpy. And so we think that we're going to need to do further rate increases, as we said, and we think that we'll need to hold policy at a restrictive level for a period of time. Then comes the labor market report for January. And it's very strong. It's certainly stronger than anyone I know expected. And so, but I would say, we didn't expect it to be this strong, but I would say it kind of shows you why we think that this will be a process that takes a significant period of time. The labor market's extraordinarily strong. And by the way, it's good. It's a good thing that inflation has started to come down without it. That has not happened at the cost of a strong labor market. So, and of course, since then, financial conditions have.
There was a conversation at the Economic Club, moderated by billionaire investor and philanthropist David Rubenstein with the Fed chair Jerome Powell regarding the U.S. economy. So, looking at U.S. perspective, President Biden's State of the Union address. On February 7th, President Biden spoke directly to the American people about historic progress made, the work that lies ahead, and his optimism for the future. He talked about the need for unions and emphasized on companies having the interests of workers for the growth of the American people. Let's find out more from the President, Joe Biden.
Progress and resilience, of always moving forward, of never ever giving up. It's a story unique among all nations. We're the only country that has emerged from every crisis we've ever entered stronger than we got into it. Look, folks, that's what we're doing again. 2 years ago, the economy was reeling. I stand here tonight after we've created, with the help of many people in this room, 12 million new jobs. More jobs created in 2 years than any president's created in 4 years because of you all, because of the American people. 2 years ago, and 2 years ago, COVID had shut down, our businesses were closed, our schools were robbed of so much. And today, COVID no longer controls our lives. And 2 years ago, democracy faced its greatest threat to the Civil War. And today, though bruised, our democracy remains unbowed and unbroken. As we gather here tonight, we're writing the next chapter in the great American story, a story of...
It's President Joe Biden speaking on the optimism for the future. Let's come back further home. NNPC promises improvement in fuel supply from next week. The Nigerian National Petroleum Company, NNPC Limited, said on Tuesday the average petrol supply for the country currently stands at 63 million liters per day. The company's Group Chief Executive Officer, Malik Kyari, stated this, adding that the NNPC had distributed 450.92 million liters, 64.02 million liters per day across the country in the last week. Kyari also apologized to Nigerians over the fuel scarcity, saying the situation was not peculiar to the country. He promised a massive improvement in the distribution of petroleum products in the country in the next 1 week. The NNPC chief revealed that the federal government pays 185 naira per litre as fuel subsidy. So looking at Nigeria's perspective, Zenith Bank PLC has shut down some of its branches in the Federal Capital Territory, FCT, and other states following attacks from customers over their inability to withdraw funds from the bank's automated teller machines, ATM, and other platforms. The bank has come under criticism from its customers amid the Central Bank of Nigeria's CBN struggle to make the redesigned Naira and its notes available. Many branches of the bank across the country are without the new Naira notes, leaving their disappointment and disappointed customers to gather in groups to discuss the situation. Also, one of the branches still operating in Enugu warned employees not to dress in Zenith Bank's uniform to avoid being identified by the public, according to reports. That's a story around Nigeria amid the scarcity of funds, the new Naira notes, and the difficulties for customers and Nigerians. But we'll now move to global economy and look at inside stories around the world. We begin with yield insights, early stages of disinflation. Can disinflation process really take flight with a hot job market in the US? A look at what yields are saying. Let's listen to insights by Jim Laurier.
3.4%. On February 3rd, we saw the latest read in the U.S. employment situation, and the numbers were pretty staggering. Now, the headline change in NFP came in at plus 517,000 jobs, far exceeding estimates of 190,000 jobs. But even more eye-popping was the 3.4% unemployment rate, which is the lowest since the late 60s. Now, there are some analysts arguing that the tightness in the labor force is due, at least in part, to the estimated 3 million people who have left the U.S. workforce ahead of trend over the last 3 years. Now, for reference on this, the labor force participation rate sits at a current level of 62.40%, significantly below the pre-pandemic level of 63.30%. Now, as expected, two-year Treasury yields shot higher with the anticipation that the Federal Reserve may have to extend its tightening cycle further in order to combat the added inflationary pressures that a tight labor market implies. What was perhaps more interesting was the underperformance of the 10-year yields, which moved from 3.4% up to 3.64%, and the difference between the 2-year versus 10-year yield curve widened to a post-data low of negative 83 basis points. Perhaps the increased inversion is suggesting that the Fed's need for added aggressiveness in the near term may lead to greater likelihood of slowing the economy in the medium term and may increase the chance of recession. If a trader believes that the underperformance of the 10-year yields may suggest a coming move lower in those yields, they could express that by selling the February micro 10-year Treasury yield futures contract at 3.64 and target a move to the psychological level of 3.25. A stop for this trade could be placed above at 3.85. This trade can make $390 if the target is reached and risks $210 if you're stopped out of your level.
That's it, but let's find out more from Japan. Japan's key inflation gauge accelerated in December to its fastest pace since 1981, and speculation is pointing to a policy pivot by the Bank of Japan. After nearly a decade of monetary easing, will the bank respond to inflation pressure with interest rate hikes? Let's have insights from Ira Epstein on the division of Lin and Associates, finding out about monetary policy in Japan.
For the first time in some 4 decades, Japan finally has inflation that is moving to the upside. The question is whether it's enough for the Bank of Japan to pivot their current policy. Number one, the market has pivoted for them. If you go back just several months ago, look at where the lows were and where you're at now. Number two, the end of the term for Mr. Kuroda comes in April. We don't yet know who the next bank governor is, but my guess is things stay as they are. The new governor comes in, puts his signature on whatever's going to take place, and from there the policy is set. It makes no sense for Mr. Kuroda to change the policy at this point, so I'd be looking very carefully for knitting.
There are concerns within Japan what happens when a new central bank governor comes. Well, the concern would be looked at because recently Japan has been all about easing their monetary policy interest rates instead of fighting inflation. But talking about inflation, let's look at the situation with Seychelles in Africa. The annual inflation rate in Seychelles eased for the 4th straight month to 2.39% in January 2023, from 2.53% in the prior month. This was the lowest reading since last June, as prices slowed down further for other food, excluding fresh fish, at 2.02% against 2.49% in December, and non-food products at 2.22% against 2.44%. Meanwhile, prices jumped for fresh fish 19.92% against 9.13%, mainly attributable to catching limits and high operating costs. On a monthly basis, consumer prices were down by 0.12% after being almost flat in the previous month. Seychelles is an island nation and a lot of fishing in that country, and prices of fresh fish has gone up. But let's have a look at the charts indicating inflation in Seychelles. The chart shows some positivity from the African nation, the island nation Seychelles. As at April 2022, inflation was at 2.2% quite slowly after hitting 2.9% previously. It went further downward, but at July 2022, it went high to 3.53%. But it slowed down subsequently, got to 2.92% in October 2022, and further slowed down consistently to 2.39% in January, indicating some positivity in the country Seychelles. It's time to look at the commodity markets, what's happening with crude oil. WTI crude futures held above $77 per barrel today after rallying for 2 straight sessions, underpinned by industry data showing U.S. crude inventories declined by 2.18 million barrels last week, defying forecast of a 2.15 million barrels increase. Risked assets were also supported after Federal Reserve Chair Jerome Powell sounded less hawkish than markets anticipated. He said that more rates and its hikes will likely be needed if the job market remains strong, but maintained that disinflation has begun. Meanwhile, the U.S. oil benchmark gained more than 5% in the past 2 sessions as suspended operations at a key oil terminal in Turkey due to recent earthquake and an unexpected shutdown of a major oil field in Norway stoked supply concerns. Investors also remain optimistic about China's demand recovery while assessing the impact of European ban on seaborne imports, price caps, and Russian oil products that came into effect on Sunday. Good time to look at what the market is saying. The crude oil in US crude, WTI crude, as well as Nigeria's price benchmark, Brent crude. Let's find out from the energy market. Market outlook from different angles has always been solid. While we're looking for what could happen within the energy market, the metal market is also up for grabs, also the agricultural markets. The metal market shows some positivity this morning for crude oil, current price $78 per barrel, upward by 1.37% appreciation. For Brent crude, which is Nigeria's price benchmark, is $84.77 per barrel, upward by 1.29%. Market is moving fast, 1.31% appreciation this morning. Natural gas is appreciating, gasoline appreciating, but TTF gas is slightly downward this morning. UK gas downward, ethanol downward, and that's the story around the energy market. Let's have a look at the metal market also. The persuasion in the metal market has been positivity. Gold price $1,883 per ounce, upward by 9.6 points, a 0.53% appreciation. For silver, is a similar story at $22 per ounce, upward by 0.31 point, a 1.4% appreciation. For copper, quite solid this morning, but still very solid in the morning market, gaining just 5 points this morning. Iron ore is slightly downward, but the rest of the metal markets is appreciating. Let's look at the agricultural market. Agricultural market has shown some positivity, $1,527 per bushel, upward by 11.75 points, a 0.78% appreciation. For wheat is a similar story, upward by 8 points, a 1.09% appreciation. But lumber is downward this morning. Palm oil still upward, hitting that 4,000 Malaysian ringgit per ton mark. 61 points gain, a 1.55% appreciation in the morning market. That's the story in the market. Let's quickly move into the FX market, beginning with Dan Deming, talking about market current commentary in the FX. The Reserve Bank of Australia raises rates by 0.25% and indicates that further increases may be necessary. Dan Deming discusses how Australian dollar is responding to the rate hikes. Let's hear from Dan.
Just under right now at the 0.693 level. And when you look at some of the driving factors, really the big driver today appears to be the Reserve Bank of Australia interest rate announcement earlier in the session when they came out and basically followed through with their quarter-point hike, and much anticipated, but certainly was again fairly aggressive in nature, and they continue to remain hawkish or aggressive in their interest rate hikes, as well as the message that they delivered after the most recent increase in the markets, the interest rate markets. So I think the hawkish tone coupled with, again, fairly aggressive stance. Now, the one thing they highlighted was that in the fourth quarter, inflation continued to show signs of increasing there. So they
is a perspective from the Australian dollar and what's happening regarding rate hikes in Australia. But let's move to the market to see the perspective of the majors in the market, the foreign exchange market, the euro against the US dollar and the rest. The market this morning indicates some positivity for the euro, but is still struggling at 1.07 US dollar equaling 1 euro. Pounds against US dollar, current price 1.2 US dollar equaling 1 pound. It's been a struggle for these pairs, neither going upward nor going downward. It's been ranging for the market. Let's also look at Naira's perspective in the morning market. Naira against the US dollar still around 459.92. The struggle continues. Market is ranging, not going upward, not going downward. As the close of yesterday, it was at this level. For the euro against the naira, naira is still gaining against the euro at the international exchange window. 491.59 naira equaling 1 euro, a negative 1.12 points, a negative 0.23 percentage depreciation for the euro against the naira. For the pounds against the naira, it's a similar story. It's depreciating by 0.24% against the naira. Let's also go to the parallel market to see the perspective of the naira in the parallel market, what the energy has been for naira. If you're buying naira against the dollar, it's at a current price of 755 on the average, but if you're selling it, it's 751 on the average. For pounds to naira, if you're buying, it's 940 naira on the average to 1 pound, and 930 naira on the average to 1 pound if you're selling it. For the euro to naira, it's 810 if you're buying, and 800 naira to the euro if you're selling. And that's the perspective in the market, the black market. Let's also have a look at the cryptocurrency market. What Bitcoin is doing, it's moving back and forth, but it's been on the rise as at yesterday, but this morning a slight decline. 43-point downward market is moving quite fast, a negative 0.18 percentage decline for Bitcoin. Current price, $23,162 US equaling 1 Bitcoin. Ether in a similar story, but quite positive. On a monthly basis, the cryptocurrency is positive. On a weekly basis, it's positive, exception of Solana. But today's market indicates slight decline in the cryptocurrency market. It's time to have a look at the stock market from a Nigerian point of view. Investors in the Nigerian capital market lost 37.02 billion naira to sell-off in Jaipur Gold and UAC Nigeria, among others, on Tuesday. After 5 hours of trading, the market capitalization dropped by a negative 0.12% from 29.61 trillion naira to 29.57 trillion naira to push the bourse into bearish territory. The all-share index dipped by 67.98 basis points to close at 54,299.76 points. Investors traded 200.03 million shares worth 7.62 billion naira in 4,380 deals. Let's look at the top gainers. Corn oil led the gainers list with a 2 naira 65 kobo rise in share price, moving from 26 naira 50 kobo to 29 naira 15 kobo per share. Bottom losers. Jaipur Gold topped the losers table after shedding 9.38% to drop from 32 kobo to 29 kobo per share. The top volume trade. FCMB led the day's trading with 27.98 million shares, valued at 130 million naira. That is it on Business 360. My name is Blyden Kim. Thank you for watching.